Hi, good evening. So today we will discuss about abnormal income, abnormal profits, and abnormal losses, and we'll be using an example. We'll be discussing this with the help of an example of a numerical on goodwill. How the concept in that numerical we'll be discussing how the concept of abnormal gain and abnormal loss can be applied in order to achieve the value of goodwill. So, for that, let's go through this question first and we'll move ahead. Suman purchased Ajay's business from 1st April 2015 and the profits disclosed by Ajay's business for the last 3 years are as follows. On 31st March 2017, the profits of Ajay's business were 45,000 rupees. On 31st March 2018, the profits were 55,000 rupees, and on 31st March 2019, the profits were 45,000 rupees. You're supposed to calculate goodwill at on the basis of average profits method and number of years of purchase is equal to 2 years. Now, if we look at this question, for each year, there is some adjustment which is also given. For example, for the year 2017, the profits are, include abnormal gain of rupees 5,000. Okay. And then for the year 2018, the profits have been arrived at, after charging the abnormal loss of rupees 10,000. So let's understand the concept of abnormal profits and abnormal loss before moving ahead with the solution of this numerical. First of all, abnormal profits are those profits which are earned, through some other business of the firm, or it could be something which was not anticipated by the business firm and the firm somehow managed to earn some extra money during a particular financial year. So when we are talking about abnormal profits, we are talking about capital gains made by the firm during a financial year. How does a firm make a capital gain? It had some property or an asset in the form of land which it sold off at a price higher than its cost. So the firm made some profits on the sale of land. That profit is known as capital gain. Although that capital gain is not uh, um, you know uh, a profit earned through the main business activity of the firm, it is still included in the total profits of the firm. So when we are saying that this 45,000 is including an abnormal gain of rupees 5,000, what it means is that this 5,000 rupees of abnormal gain is not related with the main business activity of the firm. Okay, this is the first point which we need to keep in mind for abnormal gain. So all those abnormal gains are basically not related, the gains which are not related with the main business activity of the firm. A firm may be involved in the manufacturing of some goods. It may have some additional land which it is not using. It may have a building, a prime property in a particular city, and it would dispose of that property and make some profits out of it. Such profits are basically included as capital gains. Now, apart from this, there could be another example. We can take example of lottery tickets or some money made through speculation through stock markets. It may not be the main business activity of the firm, but the firm is making money in the financial years. Invest in income through investments. So such kind of profit, which is not with related with the main business activity, is an abnormal gain. Apart from that, for the year ending 31st March 2018, it was after charging an abnormal loss of 10,000. Now, abnormal loss is such a loss which is not anticipated by the firm. So what it means is that normally every manufacturing firm or a services firm factors in certain amount, certain percentage of the revenues or certain percentage of the cost as some sort of a loss. It could be due to overheads, or it could be due to loss due to wastage, or it could be loss due to output of some defective product. So such a loss is known as normal loss. Since normal loss is factored in, it has to be subtracted from the revenues to get the profits, correct profits. But abnormal loss is such a loss which is not usually anticipated. The abnormal loss could be due to some natural disaster, such as earthquake, or you know a tsunami, or any other thing which could have damaged the business of the firm, right? Abnormal loss could also be due to the loss by fire. Eh, Especially in the current session, the firms are facing issues, business firms are facing issues due to the COVID-19. So whatever the loss the firms are incurring due to COVID-19, such a loss can be considered as an abnormal loss, because it is not something which was anticipated, but it resulted in huge loss of revenues, huge loss of profits to a lot of business firms. So this is what we need to keep in mind when we are talking about abnormal loss. So now coming to the main solution and how we are going to treat these items while finding out the goodwill of the firm. So we'll discuss that. So now how we are going to do it, we'll discuss this with the help of a solution. So we'll make a table like this, wherein we'll have particulars and two columns, other columns for amounts. In the particulars, first we will write the profits on 31st March 2017. Profits are how much? Rupees 45,000. From these profits include abnormal gain of rupees 5,000. Now, how are we going to treat this abnormal gain? Are we going to, they already include, but they are not those profits, abnormal profits are not those profits which are associated with the main business activity of the firm. Since it is not a profit earned due to the main business activity, such profits will be subtracted from the total profits. So 5,000 is the abnormal gain. This 5,000 will be subtracted from the profits of 45,000 for the year 2017. So we can write 45,000 here, and we can subtract abnormal profits or abnormal gains of rupees 5,000 from here, and we can write 40,000 here. This we have done this much. Now moving to the next year's profits, which is for 31st March 2018. So we'll write profits for 31st March 2018. They are 55,000. Now these profits have been arrived at after charging abnormal loss of 10,000. Now this 10,000 abnormal loss could be due to shutdown of factory because of COVID-19 or because of lockdown. This abnormal loss could be due to loss of goods by fire, or some natural disaster. So such an abnormal gain has to be added back. This 10,000 has to be added back to the profits, because this does not reflect the correct capacity of the firm or ability of the firm to earn profits. If had there been no abnormal loss, the firm would have made a profit of 55 plus 10, 65,000 rupees. So that is why we will add back 10,000 to the profits of the firm. So we'll write add abnormal loss of 10,000. So this will give us a profit of 65,000. Now we will move to the third year profit. Third year profit for the year, which is for the year ending on 31st March 2019, is 45,000. Now these profits of 45,000 rupees, they exclude rupees 5,000 as annual insurance premium of the firm's property. So insurance premium, we all know, is normally paid against the value of an asset, and in order to insure that particular asset against any damage, or in case of theft, the loss, some amount of loss can be recovered from the insurance company, since you're paying an insurance premium. uh, Now that is a different subject altogether. Here 5,000 rupees is a recurring expense. So we will not take adjust for 5,000 over here right away. We are not going to adjust for 5,000 over here right away. We will write this 45,000 here and we'll adjust it later on. We'll see how. So here we'll write profits for 31st March 2019 is 45,000. So we'll write 45,000 here and we will find out the total of these. What is the total? 40, 61 lakh 10, 1 lakh 50,000. So total profits of the last 3 years is 1 lakh 50,000. Since we've got the total profits, it's very easy to find out the average profits. Average profits will be equal to average profits will be equal to 1 lakh 50,000 divided by 3, which will give us a value of 50,000. Right. Now comes the question of this insurance premium. So these are the average profits of the firm over the last 3 years. Now this 5,000 annual insurance premium will be subtracted from this 50,000. So what we'll do is we'll write subtract or minus or less, whatever, annual insurance premium of 5,000. This will give us a value of 45,000. So these are the average profits, 45,000, after subtracting the annual insurance premium of 5,000. Once we've got this value, what we basically need to do is we just need to calculate goodwill. So in order to calculate goodwill, all of you are aware about the formula for goodwill, which is average profits multiplied by number of years of purchase. So number of years of purchase is 2, and average profits, which we found out, is after all the adjustments, is 45,000. Therefore, goodwill of the firm is equal to 45,000 multiplied by 2, which is 90,000. So this is how we are going to solve this question. A couple of things for recapitulation for all of you to understand. One is that abnormal gains are such gains which are not related with the main business activity of the firm, and such abnormal gains are usually subtracted from the total profits of the firm for a particular financial year. Right. So we also need to pay attention towards the language. Here it says 45,000 is the profits and it includes abnormal gain. So we know that abnormal gain cannot be considered as part of the main business of the firm. Therefore, we have to subtract or exclude this value. We have to exclude this value of abnormal gain to get the total net profits. Right. So abnormal gains are subtracted. Abnormal loss is added back to the profits. Now abnormal loss here is 10,000 and we have added it back to the profits of 55,000. But another thing which we need to keep in mind is that here it says that this 55,000 of profits for the year 2018 were calculated after subtracting abnormal loss. So it is kind of, they are giving us this, we have to understand this language. Once we understand that they're, giving this net profits after subtracting the abnormal loss, that means abnormal loss has been subtracted from the revenues of the firm to achieve to calculate the value of net profits, right? Now, abnormal loss is not a loss which occurs due to the, it is not a loss which is occurring due to the business activity or recurring nature of the business activity of the firm. It is something which was not anticipated, first of all. Secondly, it could be due to a natural disaster, or, it was not factored in by the accountants. Therefore, this abnormal loss cannot be subtracted. So it has to be added back to the profits so that we get the correct picture of the profits of the firm. That's all for today's session. We wanted to touch upon abnormal gain and abnormal loss. Hope you understood the entire concept with the help of this question. Keep watching us, and if you like my videos, you can subscribe to my channel, and we'll be putting more content for all of you. Have a great day. All the best for your exams. Thank you.